Hello guys, so if you're writing your exams in May 25, September 25 or Jan 26, you have to watch this video because it covers a very important amendment which is applicable for your exams. So in this video, the agenda is very simple. I want to discuss with you about three simple points. One is the amendment which I was telling you about, a very important amendment. Then I also need to discuss with you about a correction which ICI has made in its study material. So even we have accordingly rectified already in our material, but I just want to point it out for you once again. And I also want to talk to you about one exclusion because many students have been sending me doubts about this particular point. So this is not an amendment as such, it's an exclusion from our syllabus, and I want to talk to you about this as well. So these are the three things that I'm going to be talking to you about in this video: an amendment, a correction by ICAI, and an exclusion by ICAI. So starting off with the most important part of this video, the amendment. There's one small tiny amendment guys relating to foreign companies. Listen to me once and you will be done. Mostly from MCQ point of view, they can test this in your examination, okay? See, in your foreign companies chapter, you have learned that there are so many things a foreign company has to file with ROC. Like for example, once the foreign company establishes a place of business in India, within 30 days of establishing the place of business in India, they have to file with the ROC form number FC1, along with that fees, along with that some documents which are mentioned in section 380, and along with that one attachment. This is how you've learned, right? Form number FC1, form FC1, along with that some fees, along with that some documents mentioned in section 380. What are these documents mentioned in section 380? The charter, the MOA, AOA of the foreign company, then the full address of the foreign company's principal office outside India, then the full address of its principal address in India, then the details about the authorized representative, details about the directors and company secretary, then a declaration that the directors and the authorized representatives have never been convicted for any offense relating to formation or management, and in the past has this company had a place of business in India and then later closed, details about that. So all of these documents have to be filed with ROC. Everything has to be filed within 30 days, within 30 days of the establishing place of business in India. So how many things guys? FC1 fees, then these section 380 documents, and then what is this attachment? All these are old provisions, existing provisions. As of now, I haven't even told you what the amendment is. So the attachment is nothing but RBI approval. The foreign company should get RBI approval to establish a place of business in India, or if for the foreign company RBI approval is not required, then authorized representative has to give a declaration saying that for us this RBI approval is not required. So the attachment will either be RBI approval allowing this foreign company to establish a place of business in India, or this attachment will be a declaration by the authorized representative saying that for us this RBI approval requirement is not applicable. Okay, so these four things have to be filed with ROC. Now the question arises that it all has to be filed with which ROC? In our country, every state has one ROC. Tamil Nadu and Maharashtra have two ROCs each. So this has to be filed with which ROC? We learned that all this has to be filed with ROC Delhi guys. That is where the amendment is. It has to be filed not with ROC Delhi, it has to be filed with ROC Central Registration Center. Understanding everybody? So all this has to be filed not with ROC Delhi, it has to be filed with ROC Central Registration Center. This is what you should be writing. Okay, but however at this stage one small confusion is possible. I'll tell you what. Now it is not like in this chapter this is the only thing that has to be filed with ROC. There are so many other things also that we have to file with ROC, like for example annual return, financial statements, even that has to be filed with ROC. Then when we alter these documents, FC2 has to be filed with ROC. Then in case a prospectus is being issued, even that has to be filed with ROC. So will everything be filed with this ROC Central Registration Center? The answer is no. Only these four things which the foreign company is going to file at the time of establishing place of business in India, this alone has to be filed with ROC Central Registration Center. Understanding? For everything else, it is still going to be ROC New Delhi only. Alright everybody, so only these 4 things. What are the 4 things? FC1, along with that fees, along with that all these section 380 documents, along with that attachment. What attachment? Either RBI approval or a declaration by authorized representative saying that for us RBI approval is not required. So these 4 things, all the 4 things will not go at different dates. All the 4 will go together only. All the 4 will go within 30 days of the date of establishing place of business in India. Earlier it was going to ROC New Delhi. Now this alone will go to ROC Central Registration Center, not to ROC New Delhi. But everything else that you have to file with ROC in this chapter, that will continue to be filed with ROC New Delhi only. Okay everybody, simple point, yes, not very complicated. Only thing is these 4 points have to be filed with ROC Central Registration Center and not ROC New Delhi. Okay, so this was the first thing I wanted to discuss with you about, that is the amendment relating to foreign companies. This is done. Now there is one small correction which ICI has made in its study material, and you will find the same correction already there in my material as well, but I just want to point it out in case you haven't seen it. Alright, so the duplicate share certificate concept you have in your share capital chapter, guys, that in case your original share certificate gets lost or destroyed or defaced or torn or mutilated, you can ask for a duplicate share certificate, and of course this concept will apply only if the share certificate is in a physical form. Right guys, so this duplicate share certificate, what is the time limit? Within how much time is the company supposed to issue the duplicate share certificate? See, first of all, the shareholder who wants a duplicate share certificate, he has to submit all the documents to the company. Like for example, if it is torn or if it is defaced, then he has to submit to the company the torn pieces. Okay, if it is lost, if it is destroyed, he has to submit an FIR, he has to file an FIR with the police station and submit a copy of that along with that indemnity bond. So a lot of documents have to be filed with the company if you want to ask for duplicate share certificate. So once the shareholder has filed all the documents with the company has to give duplicate share certificate. Now within how much time should the duplicate share certificate be given? It depends upon, is the company a listed company or is the company an unlisted company? We have 2 different time limits, guys, for listed companies and unlisted companies. Let me tell you what it is. For unlisted companies, the time limit is 3 months. The whole correction is over here. For listed companies, earlier, if you look at the first edition of the new syllabus study material, it was mentioned 15 days, okay, which they have rectified to 45 days. This is not an amendment, this is a correction. Understood? So for listed companies, the time limit to give the duplicate share certificate is 45 days, and for unlisted companies, the time limit to give the duplicate share certificate will be 3 months. Okay, so this was about your duplicate share certificate point. Now comes our cost audit discussion. Now over here, there is an exclusion from syllabus. See, till Jan 2025, the whole of cost audit concept was there in our syllabus, but now they have removed one major chunk out of it, and that is why if you see in my latest edition, I have not included that excluded chunk. Okay, now see, let me tell you what the exclusion is. So you have learned that, for example, let us say this is the total number of companies in our country. Now out of these companies, only for some companies we say that they have to maintain cost accounting records. Books of accounts definition in your accounts of companies chapter, books of accounts includes items of cost prescribed under section 148, but that's not for all companies. Cost accounting records have to be maintained only by some prescribed companies. Those companies which have a turnover of at least 35 crores in the preceding financial year, only these companies have to maintain cost accounting records. Okay, now out of the companies who have to maintain cost accounting records, out of these companies, only some of these companies have to get a cost audit done. Alright, a cost audit by a practicing CMA. Now this provision is still a part of your syllabus, but then for which companies cost audit is required, that has been removed from the syllabus. It is still a part of the Companies Act, of course, they have only removed it from your syllabus. You remember, you must have learnt in the past that 50 crores, 25 crores, table A, table B, 100 crores, 35 crores, that whole table has been removed. So you just have to remember this much now, that first of all companies don't have to maintain cost accounting records, only some companies have to maintain, and out of those companies, prescribed classes of companies have to get those cost records audited. So every company maintaining cost accounting records will not get the cost accounting records audited. Out of those companies, only prescribed classes of companies will get the cost audit done. Now which companies will get cost audit done, that has been removed from your syllabus. Okay, so that's it guys, small video, just wanted to tell you all about these 3 things. The amendment, you will not get confused, right? Only those 4 things. Which 4 things? FC1 plus fees plus documents mentioned in section 380 plus attachment. That alone has to be filed with whom? ROC Central Registration Center, but everything else in that chapter is still with ROC Delhi only. Okay, duplicate share certificate for listed companies, time limit is 45 days, not 15 days, it is 45 days. And lastly, cost audit has been removed from your syllabus. Okay. And before I close this video guys, I also want to give you one super solid tip for CA Interlaw, something which I have been telling students since November 2022 exams. If you've noticed, since then I started posting my strategy videos, the 1.5 days strategy videos, and since then I've been telling students one common strategy which may be very different from what all other faculties say, but trust me when I say this, it is tried and tested for 7 exams and it has worked beautifully every single time. See, these chapters which generally we tend to keep towards the end, finish them first. You'll be doing your last revision now. You'll be doing your revision in the 1.5 days before the exam. So in that period, these 6 to 7 chapters I'm pointing out for you guys, this is going to be hardly 30 to 35% of your syllabus, but this will cover 50 marks of your question paper. This is what smart study is, isn't it? In smart study, you study those chapters really well which carry a lot of marks but don't have too much to study. You make those chapters your strength chapters, right? So with that in my mind, this is what is going to be your perfect last minute smart work strategy, wherein these chapters ensure you do them nicely. These chapters, if you do them properly, it will not take you too much time to prepare, but you are done with 50 marks of your question paper. Deposits, charges, dividends, companies incorporated outside India. 5, 5, 5, 5, minimum 5 marks you will be getting from each of these chapters. What I've put over here is a minimum number of marks. Sometimes it can be more than this also, but this is a bare minimum which you will get from these chapters. FEMA, minimum of 10 can go up to 12, can go up to 15. GC Act, minimum 10 marks can go up to 12 marks. LLP Act, minimum 10 marks can go up to 15 marks. I am not even looking at the maximum number of marks. I am looking at the bare minimum number of marks which they will ask from these chapters. Earlier in the old syllabus, we did not have this chapter, we did not have FEMA, we did not have LLP Act. So instead of these 3, I used to tell the students to do Special Contracts, Negotiable Instruments Act and the entire other laws. So now according to your new syllabus, I've added your new syllabus chapters. So guys, please trust me when I say this, but this is going to be your most effective smart work strategy for your law exam. With this, you just cannot go wrong. So that's it guys. I think I'll close this video. I hope your preparation is going on in full swing and I hope you're ready to rock those papers. Bye-bye.